Hello and welcome to this edition of Money in Motion video blog. This is Dan Perkins, and a happy belated Thanksgiving. This was recorded on Black Friday, the day after Thanksgiving. I want to specifically talk about one event that took place over the Thanksgiving holiday, which may be a paradigm shift in the world. And that was the fact that at one point in time, West Texas Intermediate crude was trading at $67 a barrel. It's now recovered back to about 69 and change, but what's important is that the impact of a decline in oil prices and what it will have on the economy. So there's several topics about this that I want to talk about, and probably many more that I should be talking about, but I just don't have the time. Let me focus on the first one. The impact of lower crude oil prices will mean lower gasoline prices at the pump. That's a given. We've already seen what's happened since this fall began in the early summer. I would expect, given the below $70 price, that we should see the price of crude oil maybe go down as low as 60, and therefore I would expect to see sometime during the winter, maybe sooner than later, the national price of gasoline somewhere between $2.25 and $2.50. The cost savings at $1.4 billion per 1 cent decline in gasoline will add significantly to GDP in this country. And so the American consumer is going to save $1.4 billion per year for every 1 cent decline in the price of gasoline. As people see the price at the pump and how much less it's costing them to fill their tank once a week or twice a week, or how often they fill it, they're going to feel a little more wealthy, so they're going to spend perhaps a little more at Christmas time. So economic expansion with increases, not in wages, but increase in spending power because the price of gasoline has come down. Second is the implications of the lower cost of energy and the refined product into so much of what we buy. Cars and planes, clothes, furniture, appliances. Petrochemicals are an important ingredient in the manufacturing of all of this. These prices are going to come down, and they're going to come down rapidly, so that manufacturers are going to be able to pay considerably less for their feedstock. Therefore, not only prices will not go up, but prices should start coming down. That leads me to a third point, and that is real possibility of significant long-term deflation in the United States. Clearly, the bond market, the 10 and 30-year treasuries are hovering near lows as a result of what's happened in the oil markets in the last week or so. OPEC met this past Thursday and decided not to cut production when the consensus was they would cut production to try and raise the price. So that deflation could be a very important part of what's the decision-making process of what's going on with crude oil. Part of that decision-making process is that if we have a low cost of energy in the United States, energy being a significant portion of a lot of manufacturing cost, we may see a resurgence of companies bringing their factories back to the United States, which should spur employment. So deflation is not a blip. I think deflation could be a fundamental shift in the paradigm that could be taking place. This would be taking place at a time when the other major economies in the world are sputtering or not going anywhere. China's cutting back. Japan just had another major stimulus to try and get their economy growing. Europe's in terrible shape. So we may have not only the best energy price, we may also be the best place to start a new business in the world, but we also may be the best place to invest in the world. The last thing I want to talk about is the geopolitical impact, as Congress is seriously considering, either now or right after the first of the year, lifting the 40-year ban on the export of crude oil from the United States. This ban was really put in 1975 after the Arab oil embargo cut off supplies of crude oil to the United States. We have come a long way in that 40 years of getting close to energy independent. We are totally energy independent as it relates to natural gas, and we could very well quickly be in terms of crude oil. If the ban is lifted, then the United States now has a geopolitical weapon to deal with Russia and to deal with the problems in the Middle East. First of all, let's deal with Russia. It's the largest producer of natural gas in the world and an exporter of crude oil. We can come to Europe's rescue should Mr. Putin threaten to shut off the oil and natural gas to Western Europe. We can send that crude oil in tanker ships very quickly to begin to replace what Mr. Putin wants to take off the market. That creates a market for us to sell more crude oil, which means more jobs, more people working, more exploration, more energy independence. In fact, oil can become a geopolitical weapon. As it relates to the Middle East, I've said to you many times before, OPEC needs about $90 a barrel to break even. At $69 a barrel, OPEC is losing money. In some cases, some of the Middle Eastern nations are already hurting to the point that they've had to tap into their sovereign wealth funds in order to be able to meet the operating expenses. At some point in time, OPEC nations are going to have to make a decision. Are they going to continue to support terrorism? And when it comes down to feeding their people or providing for the terrorists, I think they're going to start making a decision to stop feeding the terrorists and make sure that they feed their own people so they don't have insurrection. But as they begin to diminish their sovereign wealth funds, they're going to become less and less a player in the world energy markets. So from a standpoint of a price decline in oil being a political advantage for us, we can export, we can force the OPEC nations to begin to cut back on their funding of terrorists, including the Middle East. And if we can take out the Iranian oil supply that ISIL has taken in the northern part of the state, we can take that oil off the market, and we can stop the funding of ISIL at $1 million a day from black market profits. So very, very significant events that will have an impact on our economy and on the world going forward. So exciting times, interesting times, huge shifts in the paradigm. Watch the price of crude oil and also watch the price of gold, one of our three indicators, which is now below $1,200. If in fact we are going into a deflationary period, forget about the Fed raising interest rates and watch the collapse of gold be the next part of the market. So that's it for now. This is Dan Perkins. Should you have questions, please feel free to give me a call, send me an email. And as always, if you have friends or family who are looking for a real money manager, give them my name and number. Thanks for watching. This is Dan Perkins.